Question: what is tax avoidance? Answer: tax avoidance is the tax-saving device within the means sanctioned by law. This method should be used by the taxpayer in good faith and at arm's length. It is the legitimate right of a taxpayer to avoid tax as long as he adopts legal means. Facts: Sabellis Insurance Corporation authorized Benigno P. Toda Jr., its president, to sell the Sabellis building and the 2 parcels of land on which the building stands. Toda purportedly sold the property for 100 million pesos to Rafael A. Altonaga, who, in turn, sold the same property on the same day to Royal Machin Corporation (RMI) for 200 million pesos. The Bureau of Internal Revenue sent an assessment notice and demand letter to CIC for deficiency income tax for the sale. Held. The scheme resorted to by CIC in making it appear that there were 2 sales of the subject properties, from CIC to Altonaga, and then from Altonaga to RMI, cannot be considered a legitimate tax planning. Such scheme was tainted with fraud. It is obvious that the objective of the sale to Altonaga was to reduce the amount of tax to be paid, especially that the transfer from him to RMI would then subject the income to only 5% individual capital gains tax, and not the 35% corporate income tax. The sale to him was merely a tax ploy, a sham, and without business purpose and economic substance. Doubtless, the execution of the 2 sales was calculated to mislead the BIR with the end in view of reducing the consequent income tax liability. In a nutshell, the intermediary transaction, the sale of Altonaga, which was prompted more on the mitigation of tax liabilities than for legitimate business purposes, constitutes one of tax evasion.